Okay, so Tesla stock is making a very important bullish reaction today, and this could be the start of a possible bottom signal. Of course, it is still too early to tell, as there are many other important resistance levels that Tesla needs to break first to really frustrate this bearish sentiment over here. But if Tesla is about to react, now would be a very good time, and I will explain you guys why in this video. So let's see what we can expect from here. But first, welcome to the Finance Hydra channel. My name is Nathan, so let's start our analysis looking at Tesla's daily chart over here. We're gonna talk about the S&P, we're gonna talk about the Nasdaq, we're gonna see other indices over here as well. But first, let's focus on Tesla's daily chart. Here on the daily chart, we see that after reporting earnings, Tesla did nothing but crash. We crashed very sharply. We lost many support levels. We lost the 284, we lost the 277, we lost the 21 MA, and we lost the 265. Now, it appears that the next support level that could hold Tesla's price is the $240 down here. 240. And this is a quite important support level because it is the next bottom level on Tesla, and by losing this key point over here, Tesla would lose many other important support levels as well. For example, it would lose the 50-period moving average on the daily chart over here as well. So right now, in my humble opinion, the $240 area is the most important support level on Tesla stock. We are now in a long-term bull market. We just started this bull market right here. We did a golden cross candlestick pattern. We did a breakout of this flag chart pattern over here, bullish pivot point on the monthly chart. So Tesla, long-term speaking, reversed the bear trend over here. The bear trend that started in November 2021. So we are right now in a long-term bull trend. However, pullbacks are expected. But I do agree that if we lose the $240 area, Tesla would lose a lot of its bullish momentum. So this is why I'm telling you guys, 240 is the most important support level for Tesla, mid and long-term speaking. Of course, it appears that we are trying to avoid such bearish scenario because we are trying to react over here. We couldn't even hit the $240 area. We are already reacting, and this is a very good and positive bullish signal because by confirming a bottom signal over here, Tesla would just resume the bullish sentiment over here on the daily chart, because on the daily chart we don't see any crystal clear bearish reversal structure. We did a higher high. Of course, right now we are making a lower low. But as long as we don't see a sequence of lower highs, lower lows, Tesla will just remain in a long/mid-term bullish momentum. Of course, the bull trend is weaker right now because we lost our previous support level, but still, it is mostly a bullish bias over here. Now, if we take a look at the weekly chart, on the weekly chart, Tesla, last week it did a very problematic candlestick pattern because last week's pattern is a bearish engulfing candlestick pattern, very powerful, in fact, it is a quite big candlestick pattern, right? Extremely bearish, losing the support at 262, which was the gap area over here, right, from October last year. So we filled this gap. We found a resistance under the $262 area over here on June this year. And after the breakout, we found a support level over here. So this is good. But it feels like we are trying to lose this support area on the weekly chart. Although on the daily chart, Tesla looks particularly interesting because we are trying to reject the bearish scenario over here. Again, there is nothing official. This is not a crystal clear bottom signal, especially because this week, guys, we have Federal Reserve meeting. So Fed Every single week that Fed has a meeting, we see a lot of volatility, we see many false signals. So as far as I know, as far as I am aware, this week Tesla could easily crash again, frustrating this bullish candlestick pattern of today. The entire stock market could drop. It could easily drop because the S&P has yet to trigger a sharper correction, a sharper pullback, a decent pullback at least. We are moving sideways over here right now. It feels like it is a sideways correction. The 21 EMA is approaching the S&P's price over here, so it is a sideways correction. But Fed could be the catalyst for a pullback on the entire stock market this week. And honestly, a pullback on the S&P would be very interesting, would be very important, because I already told you guys this. I start to feel particularly anxious when I see the S&P going up like this, right? Without even retesting the 21 EMA. Of course, we approached the 21 EMA over here on June, again on July this month, but we couldn't actually hit the 21 EMA. The last time we hit the 21 exponential moving average was on May, right? 2 months ago on the S&P. And this is a lot. This is a very rare phenomenon, to be honest. And I did talk a little bit about this on my Instagram. This is why it is very important to follow me on Instagram as well. Come on, follow me over there. Keep in touch with my insights, with my daily life here in Brazil, because by the way, I am Brazilian, in case you still don't know that. But yes, just follow me over there, alright? The link is in the description. But this makes me a little bit anxious. The Nasdaq index is already correcting, right? We have yet to retest the 21 EMA. Of course, we didn't hit this key point yet, the support level yet. But unlike the S&P, tech stocks are actually correcting, are actually triggering a sharper pullback, trying to hit the 21 EMA over here, along with its support level, previous resistance level at 15.2K over here, this black line up here, right? A previous top level from March last year, resistance level on June this year, again on July this year, and right now it is supposed to work as a support level. So let's see how this goes, right? So far, so good. So far, we are triggering a pullback, but as long as we stay above the 21 EMA, tech stocks will remain bullish. So in spite of this correction, tech stocks are still looking quite good. I do prefer to see a sharper correction on the S&P. Maybe this could be a trigger for Tesla to actually hit the $240 again. So let's see, right? It all depends on how it is going to react after Fed meeting this week. So far, this is a quite good and promising signal. Yes, it is. But to me, it feels like we have yet to break a few particularly important resistance levels. Oh, and by the way, if you are still not a subscriber, consider subscribing this channel, because I'm gonna keep you guys updated every single day on Tesla, indices, and much more. I'm sure you are going to find something useful over here on this channel, so just subscribe. You are more than welcome. Another thing that I find extremely weird, right? This isn't actually disturbing, but it is weird because we see VIX, the fear index, going up 2%. The S&P is going up 0.4%. Nasdaq is up also 0.29%. The Dow Jones index is up 0.5%, and VIX is also up more than 2%. Usually, as far as I know, some studies revealed that VIX has a negative correlation to the S&P index roughly 80% of the time. So, okay, both are going up, but only one of them is actually lying. So, it all depends on how the stock market is going to react after Fed meetings. Of course, Fed, it is not going to be a domestic catalyst for Tesla. It is not going to be a huge catalyst. At least Tesla has more relevant catalysts right now, in my humble opinion. But if we see the market dropping after Fed meeting, this would be a perfect excuse for Tesla to retest the $240 again. So yeah, I'm gonna keep you guys updated on this every single day. And of course, if you wanna trade with me, join our Telegram channel. The link is in the description of this video to keep in touch with my personal key points, to my personal insights on Tesla, S&P, Nasdaq index, and much, much more. Join our Telegram channel. The link is in the description. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye-bye.